Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here and happy Friday. Some of you might be headed into a long weekend as it is Columbus Day on Monday. However, the stock market does not celebrate a man forgetting to ask for directions, so the market is open on Monday and I'll be here with your pre-market update. But if you do have a long weekend, of course, enjoy yourself. Now this morning we actually have a lot of exciting stock market news to get through, notable earnings reports, and of course we'll see which stocks are the morning's biggest gainers and losers. Don't forget, if you want to follow along and see what the experts have to say about your favorite stock, make sure you've downloaded the TipRanks mobile app on your favorite device. The link will be in the description down below. Now let's get right into this morning's exciting stock market news. We are ending the week off with U.S. stock futures mixed. Right now, Dow futures are up 0.10%, while S&P 500 futures are down 0.07%, and NASDAQ futures down 0.37%. Shares of DraftKings are on the rise this morning after Action Network reported that they could possibly be partnering with ESPN. The report stated that this is likely to be an exclusive agreement that would have shows and betting odds integrated into broadcasts of games. This partnership could also result in DraftKings rebranding itself with the ESPN name. They quoted DraftKings as saying, "We have a great long-standing relationship with ESPN. However, we speak to a variety of companies on a regular basis and don't comment on the specifics of those conversations." Analysts currently rate the DraftKings stock a moderate buy with an average upside of 51%. A Delaware judge has agreed to a stay order on the trial between Twitter and Elon Musk, postponing it until October 28th. This comes after Musk's representatives argued in a filing on Thursday that Twitter would not take yes for an answer and would not agree to put the trial on hold. His lawyers said that progress was underway to finalize the debt funding package integral to sealing the purchase, but that it wouldn't be ready before October 17th. The judge has now given both sides until October 28th to close the deal, or else the trial is back on at some point in the next month. Analysts largely rate the Twitter stock a hold while this saga continues. In other Elon Musk-related news, it was announced that Tesla would deliver their first semi-trucks to Pepsi at the start of December. After months-long delays and struggles with part shortages and battery supply constraints, Tesla seems to be ready to enter the trailer market soon. They announced that the production of Tesla semi-truck with deliveries to Pepsi would happen on December 1st. The truck will have a driving range of 500 miles and will apparently be super fun to drive. Analysts currently rate the Tesla stock a moderate buy with an average upside of 28%. Google's parent company Alphabet plans to spend 100 billion yen or $690 million in Japan. Their chief executive officer told Nikkei in an interview on Friday that they plan to invest this money through 2024. They'll be opening their first data center in Chiba Prefecture near Tokyo next year, which will provide faster and more stable access to Google's services. Analysts currently rate the Google stock a strong buy with an average upside of 40%. Adidas said that they'd be putting their popular sneaker collaboration with Kanye West under review. This follows reports that the partnership, which had started back in 2015, has soured over recent months, with Kanye arguing that the brand had copied some of his designs. Under their partnership, he is supposed to retain full ownership of the Yeezy brand while having total creative control. In an unusual move for Netflix, they'll be releasing the sequel to Knives Out in theaters for 1 month before it's released on the streaming platform. The film will premiere in 600 U.S. theaters on November 23rd before becoming available on Netflix's platform on December 23rd. This is an out-of-the-box move for Netflix, who has typically kept its originals away from theaters unless it was to meet the minimum eligibility criteria to compete for awards. It is because of this tradition of not allowing a few months between the film to run in theaters and debut on streaming that AMC had earlier declined to show Netflix films on its screens. Analysts currently rate the Netflix stock a hold with a slight upside of 2.4%. And shares of cannabis stocks are soaring following the announcement from President Biden that they would be pardoning thousands of people convicted with simple marijuana possession charges. The president also urged governors to take similar actions for state offenses. He also said that he's directing the Secretary of Health and Human Services and the Attorney General to review expeditiously the classification of marijuana as a Schedule I controlled substance. This is a category that includes dangerous substances like heroin and LSD that have a higher risk of abuse. Now moving over to notable earnings reports. On the subject of cannabis stocks, this morning we did hear from Tilray, who did miss on their earnings expectations. Tilray reported a loss per share of 8 cents that was 1 cent wider than analyst expectations. Their revenue of $153.2 million was down 8.8% year over year and did miss expectations by $3.64 million. Analysts currently rate their stock a hold with an upside potential of 10.5%. In the after hours last night, we did hear from Levi Strauss. Their earnings beat expectations, but the stock is falling as they lowered future guidance. For their third quarter, they reported earnings of 40 cents per share, ahead of the analyst estimates of 37 cents per share, but this was an 18% decline year over year. They reported net sales of $1.5 billion that was in line with analyst expectations. For their fiscal year, they're now saying that unfavorable foreign exchange rates will cause a 5-cent headwind, and slowing consumer demand and continuing supply chain problems will also weigh in. Analysts do currently rate the stock a strong buy with an average upside of 53%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by Payoneer after it was announced they'd be joining the S&P Small Cap 600. Under the ticker PAYO, their stock is up 7.2%. They're followed by Atlas under ATCO, up 7.19%, and Dexcom under DXCM, up over 6%. Our biggest losers this morning are led by Lantheus. They're cooling off from gains yesterday after analysts initiated coverage with a buy rating. Under the ticker LNTH, their stock is down 6.7%. They're followed by Advanced Micro Devices under AMD, down 5.6%, and Centene under CNC, down 5.3%. So that is going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button, say good morning in the comments down below, and make sure you have that TipRanks mobile app downloaded as well. Thank you guys for watching. Have a fantastic weekend, and I'll see you back here on Monday.